Okay, please confirm, guys, audio is okay to all of you. Okay, great. No issues in audio as of now. So, first of all, thank you very much for taking out time joining this live session. I hope this webinar on option chain analysis add uh, value in your trading skill. So let me show you the content of this webinar, what we are going to cover in this webinar. Okay, so this is the content, guys. We will try to understand what exactly open interest is. See, option chain analysis is all about analyzing open interest. So first of all, what I will do, I will throw some light. I will give you the introduction, what exactly open interest is and how you can read this open interest table and how to do price graph analysis. See, the very first step, you must understand how to do price graph analysis, and then you need to do open interest analysis. By doing price graph analysis and open interest analysis, okay, we can able to develop a view on index. And based on our view, okay, we will decide which strike price we should select for option writing. So you can remember this sequence. As a trader, first of all, you should focus on graph analysis. Once price graph analysis is done, you can do open interest analysis and develop a view and select right strike prices. Today, I will also show you how you can execute the trade to avoid volatility risk. Now, this volatility risk will come when you are doing trading on the day of expiry. So how to avoid such volatility risk? So this, I will give you 1 to 2 examples on this. Now, these are the some benefits of doing option chain analysis. See, with the help of option chain analysis, you can develop a view on underlying. Now, underlying can be index or underlying can be stocks. So by doing option chain analysis, you will come to know whether market participants have a bullish view on underlying, bearish view on underlying, or neutral view on underlying. You can also select right strike prices to sell option after doing option chain analysis. And it will also help you in generating consistent income every week. So you can easily make 1.5 to 2% return on your capital every week by doing proper option chain analysis. You can just trade one day in a week and you can manage to generate 1.5 to 2% consistently every week by selling option. So as I discussed here, 3 views can be possible after doing option chain analysis. Okay, bullish view, bearish view, or neutral view. So let's say if your view is bullish, so in that case, what you can do, you can sell put option. Okay, if you have a bullish view, if you feel that market participants having bullish view on underlying, so in this case, we will sell put option. Now here is the example in front of you. So you can short, let's say Nifty 17,300 put option. Now this is the ATM put option. If you see right now, Nifty closed at 17,323 level. So ATM strike is 17,300. So as a trader, let's say you have a view that Nifty is likely to close or settle above 17,300 in this expiry. So you can directly sell 17,300 put option. Now this is naked put option writing. When you do this, this is the margin requirement. Somewhere close to 97,000 you need. Other option you have, you can sell OTM option. Instead of at the money, you can also sell OTM. So let's say I'm selling 17,000 put option. If you are selling OTM option, see, this is the margin requirement. Somewhere close to 88,000 you need. You can also take margin benefit. If you have a margin constraint as a trader, you can take margin benefit. Now, how to take margin benefit? By buying deep OTM put option. So you can go long 16,500 put option. So let's say if you are selling 17,000 put option, okay, your view is Nifty is likely to settle above 17,000. So in this case, what you can do, you can you can sell 17,000 put option, and at the same time, you can also buy 16,500 put option to get margin benefit. You can always keep 500 points distant from your selling strike. So if you do in this case, this will be the final strategy. You are long 16,500 put and you are short 17,000 put. Can you tell me which is the strategy we have designed here? This is which strategy you can see. We have sold 17,000 put and we have bought 16,500 put. Can you tell me the name of this strategy? Perfect. This is bull put spread. Okay, this is not a strangle. This is bull put spread. So again, I will go to the previous slide. See, by doing graph analysis, by doing option chain analysis, okay, we can come to the conclusion whether market participants are having bullish view, bearish view, or neutral view. If market participants are having bullish view, okay, we will go for bull put spread strategy. If market participants are having bearish view, as a trader, what we can do, we can go for bear call spread. And if they have a neutral view on underlying, so in this case, we can go for short strangle. We can also go for short iron condor. Okay, this I will explain. So mostly neutral view is possible on the day of expiry. So on Thursday, by looking at option chain analysis, most of the times we may come to a conclusion that participants are having neutral view. So in this case, what we will do, we will sell both. We will sell call option. We will also sell put option. If view is bullish, our bet will be on put option. We will sell only put option. And to take margin benefit, we will buy deep OTM put option. So that strategy will be bull put spread. In the same way, if participants are having bearish view, we will go for bear call spread. Okay, we will sell call option, and to get margin benefit, we will also buy deep out the money call option. So the name of strategy will be bear call spread. If they have a neutral view, we will sell both call option as well as put option. So if you are selling call and put, so this strategy will be termed as strangle. Okay, short strangle. So short strangle is possible when participants are having neutral view. Now, when you do short strangle, okay, margin will be very high. It will somewhere close to 1 lakh you need to do short strangle. And with new margin rules from 1st September, maybe it will take more than 1 lakh to design short strangle in live market. So what you can do, instead of short strangle, okay, you can go for short iron condor. So this will take you less than 50,000 if you are going for short iron condor. Okay, please confirm, guys, voice is proper now. Okay, guys, please confirm audio is fine. It may happen, it may break in between, because as I told you, heavy rainfall is going on in my area. So there is a possibility in between voice may break. Okay, so this was all about bullish view. Okay, great. So let's move. So guys, here you can check margin requirement. So if you are selling ATM put option, okay, if you are selling at the money put option, here you can check margin requirement. If you are going for OTM strike price, if you are selling OTM put option, you can see the margin requirement. Okay, margin will be comparatively less for OTM strike. And if you are taking margin benefit, look at the margin requirement. It is only 38,290 rupees. So there is a possibility you can design bull put spread, okay, under 40,000. And on 40,000, you can easily make 1.5 to 2% return on investment every week by just doing one trade in a week. So 75 to 80% of time, okay, you will make profit. So you can try this with one lot slowly and gradually. What you can do, you can start scaling up. Maybe you can add 2 lots, 3 lots. Now I can understand 1.5 to 2%, maybe you feel that it is very low return on capital, but in this strategy, you will get more of safety. Okay, your capital is protected. So this is very conservative approach. Today I will teach you how you can go for bull put spread, bear call spread, and short iron condor. In the same way, if you have a bearish view, what we will do, we will sell call option. Now again, if you sell ATM call option, okay, margin requirement will be very high. It will be very close to 1 lakh. In the same way, if you sell out the money call option, so it will require somewhere close to 88, 89,000. To get margin benefit, again, what you will do, you will buy deep out the money call option. So let's say if you are selling 17,600 call, this means your view is you are expecting that Nifty to settle below 17,600. To get margin benefit, what we are doing, we are buying deep OTM option, 18,100. So your final strategy will look like this. You are long 18,100 call and you are short 17,600 call. Okay, long 18,100 call, short 17,600 call. So this strategy will be termed as bear call spread. Okay, our focus is on this 17,600 level. We are expecting index is likely to settle below 17,600. That's why we are selling 17,600 call, and to get margin benefit, okay, we are buying 18,100 call option. So this is bear call spread strategy, and margin requirement will be again less than 40,000. Okay, Mr. Narayan Rao, see, this webinar is on option writing. Okay, option writing means option selling. So we will discuss only about writing part, okay, not option buying. Now let's say when you have a neutral view, what we will do in this case. If you have a neutral view, you can sell both call option as well as put option. Here you can see I have sold 17,400 call. I have also sold 17,300 put. So as a trader, can you tell me what this indicate, what I am expecting, where index is likely to settle? If we have sold both 17,400 call, 17,300 put, what is the view? Where I am expecting index is likely to settle? Perfect. Index is likely to settle between 17,300 to 400 range. So this is called as a neutral view. Now this type of strategy is known as short strangle. Okay, this is short strangle strategy. If you design this strategy, margin requirement will be more than 1 lakh. Okay, maybe somewhere close to 1 lakh 11, 1 lakh 20,000 it is required from 1st September. Now to get margin benefit, guys, what we can do, we can buy deep OTM call input. How many points distance we can keep from our selling leg? We will keep 500 points distance. So you can also buy 17,900 call because you have already sold 17,400 call. So 500 points away, buy 17,900 call. In the same way, you have sold 17,300 put. So 500 points away, you should buy 16,800 put. And your final strategy will look like this. So these buy legs, they are just added to take margin benefit. Our focus is on these two levels. We are expecting Nifty index is likely to settle between 17,300 and 400. And margin requirement for this will be less than 50,000. So neutral view, this is possible on the day of expiry. Yes, now it has become iron condor. Okay, this final strategy is looking like short iron condor. If you are trading with only 2 legs, see, if you do not have margin constraint, the best part is you should trade with 2 legs. If you have a margin constraint, then only you should go for 4 legs. So neutral view is possible on the day of expiry. Before expiry, we can either go for bear call spread or we can either go for bull put spread. Okay, so before expiry, bull put spread or bear call spread. On the day of expiry, we can go for short iron condor or short strangle. Okay, so we will deal with these three strategy. Here you can see the margin requirement if you are going for short strangle. See, 1,11,000 is required. And when you are designing short iron condor strategy, see, margin requirement is less than 50,000. Okay, so we will deal with these three strategies in this webinar: bull put spread, bear call spread, and short iron condor. Okay, so you should remember this. Without margin benefit, you can short naked put option on bullish view. You can short naked call option on bearish view, and you can go for short strangle on neutral view. Okay, this is without margin benefit. And with margin benefit, this will be bull put spread on bullish view, bear call spread on bearish view, and short iron condor on neutral view. Now let's start with option chain analysis. Okay, what option chain analysis is. So we will focus on how to read this option chain data, when to read option chain data. Okay, this is also very important. Yes, I will share the PPT. So this I like to explain here only, when to read this option chain data. See, when you are trading in index, okay, Nifty or Bank Nifty, if you are trading in index, I will advise you should read option chain data on every Wednesday and Thursday, okay, for weekly expiry. Reading option chain data very close to expiry makes sense. And when you are trading in stocks, let's say you want to sell options in stocks. Stocks have monthly expiry. So for first 2 weeks, okay, you should not read option chain data. You can start reading option chain data from 3rd week onwards. So generally we have a 4 expiries, okay, when it comes to stocks. So in last 2 weeks, okay, theta decay will be very fast. So it is advisable for stocks, you should not read option chain data for first 2 weeks. You should start focusing on option chain data from 3rd week onwards. If you are interested in index, then 1 day before expiry and on the day of expiry, you must read option chain data. Now, many times happen, suddenly you will get a breakout or breakdown. You may see, index has given a nice breakout on upside, or it has it breaks support on the downside. Same thing, goes to stocks. So let's say any stock is facing resistance and suddenly you got a good breakout. So on the day of breakout or breakdown, okay, it makes sense to read option chain data. So you will confirm whether breakout is likely to sustain or not by reading option chain data. Okay, so generally we should read for index 1 day before expiry, on the day of expiry. And for stocks, we should read from 3rd week onwards. Only exception is when you are getting breakout or breakdown, resistance breakout or support breakdown. So whenever breakout breakdown happens, on that day also you can read option chain data. Okay, we will take some example on that. And last point, we need to understand how to use this option chain data to select strike price. Okay, so this is the introduction to option chain analysis. Option chain analysis is all about analyzing open interest. So now I will tell you briefly what open interest exactly is. See, in simple words, open interest basically means number of contracts which are active, okay, which are not yet closed. So the name is open interest because these contracts are not yet closed. They are still open in market. So the name we are using open interest. Okay, number of contracts or number of shares, you can say, which are active, which are not yet closed. Now in technical words, see, one long contract plus one short contract is equal to one open interest. So let's say, for example, you have bought Reliance 2,400 call option, for example. If you have bought 2,400 call option, there will be some trader who have sold to you 2,400 call option. So one long contract plus one short contract, okay, makes one open interest. But when we are doing option chain analysis, we read option chain table from option seller point of view, okay, not from option buyer point of view, because seller has unlimited risk, okay, when it comes to option. Buyer has limited risk up to the premium paid, and generally it is said that big institutes prefer to sell option. So we will always read option chain table from seller point of view, not from buyer point of view. Now, in the entire table of option chain data, okay, two columns are very important: open interest, change in open interest. So in the entire table, in this entire table, we will focus only on these two columns. Okay, open interest, change in open interest. Okay, this is very important note to you. Open interest data is dynamic data. Okay, it keeps on changing. So that's why I've told you in the beginning only, for index, we will always read this table on the day of expiry and 1 day before expiry. Why so? Because this is dynamic data. So reading option chain data very close to expiry makes sense. And for options, as I told you, they have a monthly expiry. So for first 2 weeks, we will not do any analysis. From third week onwards, we can do analysis. This is how option chain looks like. Okay, this is TCS option chain. So at the center, you can see we have a strike prices. Here you can check we have a data for call options. Okay, these all are the data for call strikes on left side. On right side, you can check we have a data for put strikes. Okay, Ajay sir, we will come to know. Okay, later on I will tell you how we will design this strategy. So first focus on important concepts which we are starting now. And please ask the doubt in by selecting everyone. Okay, so that other participants can also see your doubt. Okay, so once again, this is TCS option chain analysis. At the center, we have strike prices. On left side, we have a data for call. On right side, you can see we have a data for put option. Here you can check open interest, change in open interest. Okay, these were the two columns I was talking about. On this side also, you can see the same open interest. Okay, change in open interest. OI change, you can read this as change in open interest. First, we will focus on put option, put side. On put side, we will focus in open interest, and then later on we will come to this column. Okay, change in open interest. First, we will focus on open interest column on put side. Now here you can check we have this number which is highlighted, 4,29,300. Can you tell me why this number is highlighted here? Any reason for this? Because this is the highest number out of this column. That's why you can see this is automatically highlighted. Correct, maximum. So 3,400 strike price, put option. Okay, 3,400 strike put option is having highest open interest. So this means market participants are expecting TCS is likely to settle above this level on the day of expiry. That's why you can see we have a maximum open interest in this strike price. Same thing you can do for call option. On call side, you can see we have a 3,500 strike, 3,500 strike with highest OI, 8,25,000. This means market participants are expecting 3,500 can be the hurdle for TCS. Okay, so 3,400 support. So you need to remember this strike price with highest OI on put side. Strike price with highest OI on put side can work like support, and strike price with highest OI from call side, okay, can work like resistance. Now let me explain you change in open interest. What change in open interest represent? First of all, whenever you see any negative number, Okay, when it comes to change in open interest, whenever you see any negative number, okay, this represent unwinding. Okay, unwinding means traders are closing this position. So for example, you can check in 3400 strike, we have a negative number 75,600. These many shares are closed. 20,100, again you can see unwinding in 3420 strike. So any negative number in represent unwinding, traders are closing their position. Look at this one, 36,900, this is positive. This indicates fresh put writing has happened today in 3,480 strike price. Fresh put writing happened today. Okay, these many number of shares are added today. So this is the new business which have came today. Look at the total OI. Can you see total OI is 58,200. But out of this 58,200, 36,900 shares are added today. So I can say fresh put writing happened today in 3,480 strike price. In every strike price, you can see other than 3480, in every strike price, there is unwinding. Look at 3460. Fresh put writing happened in 3460 also. But highest happened in 3,480. So that's why change in open interest is very important. I will explain this on which website you can see this. Okay, first understand the concept. Okay, which tools we have to use, I will explain. Same thing, guys, you can check on call side. So I can see highest OI in 3,500, 8,25,000. Look at the addition which happened today, 2,21,100. So this is the fresh call writing came in 3,500 strike, followed by 3,480. 1,93,200 shares are added in 3,480 strike. Now compare this 1,93,200 with 36,900. So this level can work like resistance because call writing, fresh call writing we have seen today. So this can work like resistance for TCS 3,480 and 3,500 because in both strikes you can see we have a fresh call writing. And if you combine both the figures, the number will be more than 4 lakhs. So this is how you have to read the data in live market by focusing on OI, change in OI on both sides, call as well as put. Now, one important point you can note it down. On put side, we have a strike 3,400 with highest OI. On call side, we have a strike 3,500 with highest OI. So most of the time you will find, highest OI will be in round off strikes. 3,400, you can check this is round off number. 3,500, you can check this is also a round off number. So most of the time in round off numbers, you will find highest OI. So that's why, as a trader, if you are doing intraday trading in stocks and stock price is trading very close to round off numbers, so be careful. Round off numbers, work like support and resistance because of highest OI. Okay, Pankaj sir, as I told you, we will read option chain data from seller point of view, not from buyer point of view. So if I go back here, you can check. I have clearly explained one long contract plus one short contract makes one open interest. And we will use this option chain data from seller point of view, not from buyer point of view. Because seller is having unlimited loss when it comes to option writing, buyer is having limited loss. So we will respect option chain data from seller point of view, not from buyer point of view. Okay, this is the assumption we need to keep in mind. What you are saying, it can be true, but when we are doing option chain analysis, we will always respect from seller side, not from buyer side. Okay, so guys, what I have explained till now, put strike with highest OI, act like a support, call strike with highest OI, act like a resistance, put strike with highest change in OI, okay, indicates fresh put writing. Okay, new business came in. This is more important. Call strike with highest OI, with highest change in OI, okay, indicates fresh call writing. Okay, this is the latest screenshot I have taken for you for 2nd September expiry. Okay, this is the Friday 27th August EOD screenshot. Okay, so this is Nifty index. Now I want you guys to spot support and resistance from this column. According to you, what can be the support and what can be the resistance? Okay, we want support and resistance from this strike price. When I'm saying support and resistance, you should focus only on OI. Okay, you need to focus only on OI column, not on change in OI column. Just focus on OI column. Perfect. So 16,600 is the support because of highest OI, 41,92,500. On call side, 17,000, 35,11,450. Again, you can note down same point which we have discussed. You will always find highest OI in round of strikes. So 17,000 you can see round off. So that's why you have a highest OI. 16,600 round off. That's why you have a highest OI. 41 lakh. Followed by, you can see another round of psychological level, 16,500, 34 lakh OI. Okay, now these were the basics. Many of you might be aware of what I have talked about. Now we will focus on price graph analysis. And then after that, what we will do, we will mix both, okay, price graph analysis as well as option chain analysis, and then we will form a view. So here is the Nifty graph in front of you, 15 minutes time frame, 1-5. Okay, I always prefer to do analysis on 15 minutes time frame and hourly time frame. Okay, when it comes to index. So first we will focus only on 15 minutes time frame here. So date you can check 16th, 17th, 18th. Okay, from 16th till 24. Okay, you need to find out support and resistance from this graph. See, this graph analysis you need to do on daily basis, Arun sir. Okay, graph analysis we have to do on daily basis. So that's why you can see I have a data from 16th. 18th was expiry. If you remember, 18th August was expiry. So this is Monday, Tuesday, this is Wednesday. Okay, Thursday was holiday. This was Friday. And again, Monday, Tuesday. On daily basis, we will do graph analysis. From this graph, we need to find out support and resistance. Okay, you need to find out support level and resistance level. So look at the graph carefully. On right side, you can see the levels and tell me the support and resistance, which you can see. This graph analysis is very important if you wish to avoid volatility risk in live market. So you should have a right levels with you. Okay, try to find out support level, resistance level in this entire graph. You may not see single support or single resistance. Okay, you may come across multiple support resistance. You can mention every level. Okay, perfect. 16,700 is the resistance. Apart from 16700, there is one more level which is working like a resistance, if you can mention. Okay, 16700 is the top here, I can see. Look at the fall. This was a very strong fall. Price went very close to 16700, and this was a very sharp fall, you can see. So that's why this became very important level, 16700. Okay, 16600, perfect. Here you can check before 18th expiry, 16600 was working like a resistance. Same thing happened here. You can check, we got gap up opening. Look at the first candle. I always say, as a trader, you should learn how to read first candle of the day. Okay, on 15 minutes time frame, after opening gap up, we have an open equal to high formation. So this is like gap up failed setup, which I discuss in my stock trading secrets program. So we got this perfect setup on 23. First candle bearish, open equal to high formation, again 16600, very close to 16600. So 16700 resistance, 16600 was resistance. On downside, you can see we have a support 16400. You can always look for these, nice rejection. Here you can see we got a very nice rejection exactly from 16400 level. See, and below 16400, you can see this is the first candle. So on this day, what happened? We got gap down opening, but lower levels did not sustain. Price immediately recovered. So the low of first candle became very important. So on the day of gap up, gap down opening, okay, these points are very important to look at. So this was gap down opening day. On gap down opening day, lower levels did not sustain, price bounced. So the low of this candle became very important. And next day, see, opposite happened. We got gap up opening. But after opening gap up, higher levels did not sustain. Price immediately came down. So high of this level became very important. Okay, so these points you need to catch when you are getting gap up, gap down opening. Okay, so here you can see 16400 and 16375. This is very close to 16370 or 375. So this was the support on this entire day. Even after opening gap down, Nifty index was not going below 16400 level. Next day, we got gap up 16600. Price came down, exactly bounced from 16400. And we got closing above 16400. So by looking at, only these 2 days, I can say Nifty has formed a base at 16400 level. And resistance 16600 followed by 16700. Okay, so your graph should look like this when you plot support and resistance. Okay, so on downside, see 16400 is the base. Even after opening gap down, price did not went below 16400. This was a very big fall after opening gap up, but still price did not went below 16400. So this is the base, you can say, index has formed. And still you can see 16600 is the resistance. Now let's say what will happen if 16600 is taken out. What will be your view on the graph? We should go for which strategy, whether we should go for put selling, put writing, or call writing. See, as of now, index is moving between 16600 and 16400. But what if 16600 is taken out? What will be your view at that time? Perfect. We will go for put writing. So what we can do after doing this graph analysis, okay, we should focus on option chain analysis. See, this is 24th August EOD screenshot I have taken for you. Now, once again, guys, what you need to do, you need to spot support and resistance from this data. Okay, from price graph, we already know 16400 is the base, 16600 is the resistance, followed by 16700. This what we know from price graph analysis. Okay, this we are talking about 26th August expiry. Now, same thing we will confirm from option chain data. I will also show you live market screenshot. Okay, this is the EOD screenshot, 24th August. So try to find out support and resistance from this data. Simple 16,500 to 16,800. Here you can check 68,32,950 shares are active. 16,500. Round off number, psychological level. On call side, we have a highest OI in 16,800. 47,41,150. Okay, now focus on change in open interest. Fresh put writing. Tell me the strike price in which fresh put writing you can see. Okay, fresh put writing. Tell me the strike price in which fresh put writing you can see. So this I am showing you data for Tuesday. Okay, this was what happened on Tuesday because expiry was on Thursday and we are doing this as of Tuesday. Perfect. 16,500, 16,600. Fresh put writing is going on. So on graph analysis, what we have did, see, you can see this is 24th. On 24th, see, Nifty was not initially crossing 16,600. When 16,600 crossed, okay, fresh put writing started in live market, in 16,500 strike, in 16,600 strike. So you can say these are the some aggressive numbers because we are getting these numbers on Tuesday itself. And look at the highest OI, 16,500. So if you ask me, as per graph analysis, I will say you can go short 16,500 strike price. But if you wish to take very safe trade, so my advice will be you can short 16,400 or you can short 16,350. Okay, do not look at the premiums. Here you can check premiums are less than 10 points because this is EOD as of 3:30. But when you are in live market, when you are doing this analysis in live market, you can easily get 20 to 18 points for 16,400, and for 16,350 you can easily get 15 to 16 points. So the point is, first what we are doing graph analysis. We are trying to find out the base for the Nifty. So this was the strong support, 16,400. Once Nifty crossed 16,600, we came to know fresh put writing started, 16,500, 16,600. If you wish to take risk, okay, if you want to take very aggressive bet, you can go for 16,500 because this is 2 days before expiry. Okay, we are doing this 2 days before expiry. So two types of risk are involved: volatility risk, overnight risk. If you do not want such risk, if you want to have very safe trade, then you can go for 16,400. By 16,400, you can see we have already seen that 16,400 is the support. If you want very safe trade, you can go for 16,350. You can easily get anywhere between 15 to 20 points with less volatility risk and very minimum overnight risk, I will say. Okay, logic I have already repeated. From graph analysis, we have seen 16,400 is the support, and from OI data we can see 16,500. Market participants are betting in 16,500 strike, 16,600 strike. You can see fresh business is coming in from 16,500, 16,600 strikes. So that's why I told you, if you want to have a very safe trade, you can go for 16,400, you can go for 16,350. Okay, you can go for bull put spread. So let's say, for example, you are going for 16,400 put option. You can sell 16,400 and you can buy 15,900. So in this way, you can design strategy. It will cost you 40,000 at that time because this was before 1st September. And this is what you can see I have done here. The gain was 1.55%. So you can always try this with one lot once you gain confidence, because it will take for for you 2 to 3 weeks to be master in this. Okay, I'm doing this since last 5 to 6 months now. Okay, I do this for my clients. I have a Sri Sai AMC where basically I manage funds for my clients. So I usually do with one lot in every client account. So this is the trade date. I took this trade based on the logic which I have shown to you. So I sold 16,350 put option because when it comes to client money, safety is more important to me. So instead of 16,400, I could have easily sold 16,400, but I don't want to take chance. So I gone for 16,350. So here you can check I got 15.01. Now this is very odd number 15.01 because this is after adjusting for brokerage. Okay, in angel broking. So this is net prices you can see after adjusting for brokerage. You can calculate on net basis how many points we got. We got almost 13.60 points, 13.6 on investment of 40,000. So this was 1.55% gain. Very less risk, less overnight risk, less volatility risk. Now, important point is what should be your stop loss. See, on the day of expiry, on the day of trade, okay, whenever I took trade, so on that day, what I do, so let's say I have sold this option at 15 points. So my stop loss will be double of this. I always follow 200% stop loss rule. Okay, 200% means if you have sold at 15, your stop loss should be 2 times. This will make sure you should not lose more than what you were expected when you were taking trade. So if I have sold at 15, okay, my stop loss will be 30. Either I will make 15 points or I will lose 15 points. So I prefer to take trade with 1:1 risk reward ratio when it comes to option writing. I hope this stop loss part is clear. On the day of trade, I basically follow this rule. If I have taken trade at 15, my stop will be 30. Next day, okay, next day what I will do, mostly I took trade on Wednesday, but this was the first case I took trade on Tuesday. Because of the graph analysis and OI data analysis, I was very confident that Nifty is likely to settle above 16,350. So I took this trade on Tuesday, first time. So next day, what I will do, I will calculate the net points which we have got. So we have got 13.5. So my stop loss will be 27. So this practice I basically follow whenever I took trade. Any doubt, guys, in this you can ask. So first we did graph analysis, then we did OI analysis. Based on this, we come to know we should go for selling put option because market is looking like a bullish because it took support at 16,400. It crossed 16,600. So next level, I was expecting it will test 16,700. So that's why I took this decision and I sold 16,350 put option and designed bull put spread. Any doubts till now? Shall we move ahead now? How to trade on the day of expiry to avoid volatility risk. Okay, this is very important. Because of volatility risk, your stop loss can easily hit. So we need to take a trade at right level. Okay, on okay, sorry guys, I got disconnected. So yes, I was asking about any doubts, guys, till now you can ask. Yes, we can do this in Bank Nifty. Okay, I basically do trading in Nifty. So my, examples will be on Nifty, but same logic you can apply on Bank Nifty, same logic you can apply on stocks. Okay, Twinkle sir, see what we have to do. While entering in this trade, okay, first you need to buy 15,850 put option, and then you need to sell 16,350 put option. Okay, at the time of entering in this trade, at the time of designing any strategy, if you are taking margin benefit, first you should trade buy leg, and then you should trade your sell leg. While doing square off, okay, it is completely opposite. We will square off sell leg, and then we will square off buy leg. But I always trade one side. Okay, I will enter in this trade and I will not square off until and unless I do not see any risk. Okay, I will not square off this trade. If there is a risk, if I'm expecting market can change the direction, then I will, exit at 2 rupees, 3 rupees, maybe at that time I will take the call. But mostly my trades are like this. Once I'm entered in this trade, I will not do square off to save brokerage and other charges. Because anyway, if our view is correct, Nifty settled above 16,350, so this option is worthless. So it will be auto square off from exchange side. Yes, all the trades will be positional. Because right now, there is no difference left in intraday and positional. So you have to take all trades positional. Both are important, Narayan sir. See, until and unless you do not do graph analysis, you won't be able to understand what are the important levels. Once you're done with graph analysis, then you have to do OI analysis. Then only you will see the result. Yes, auto square off. Auto square off, it won't be auto square off, it will be auto settlement, I will say. Okay, it will be the auto settlement. So exchange will check how much credit you got, 13.6. So that amount will be credited in your account. So that will be the auto settlement. Okay, always design these trades and carry forward, and do not square off. If option became 0, it became 5 paisa, you should not square off from your side. Okay, it will save your brokerage. Okay, now next, I like to explain. Yes, you will see when you see the ledger balance. So, for example, here you can check, Ajay sir, I have designed this trade on 24th. So, EOD, when you go to your ledger balance, okay, this much amount will be always already credited in your account. Okay, so next, I like to explain here how you can trade on expiry day to avoid volatility risk. Now, because of this volatility risk, okay, your stop loss can easily hit. For index, it will not take time to double your option price on the day of expiry. So if you are trading on the day of expiry, you should be careful with volatility risk. So that's why that's why I told you price graph is very important. Doing price graph analysis is very important. We need to trade at right levels on the day of expiry. Okay, this trade which I have shown you, I prefer to take these kind of trades before expiry, that is on Wednesday, because I will get theta decay benefit because Thursday is expiry. This is the first trade which I took on Tuesday instead of Wednesday. So now I will explain how to trade on the day of expiry at right levels. Okay, before that, what we will do the graph analysis. Okay, assuming we are doing this trade on 26th August. So we need to do graph analysis before 26th August. Okay, this part we have already done, if you remember. So let me mark support and resistance for you. So this we have seen, this was the support 16,400. So I will take one horizontal line here. Okay, first candle low, gap down opening day, first candle low became very important because price is recovered. So you can check this candle low was 16,376. Gap up opening, higher levels did not sustain. So this candle high became very important for me, which is 16,600, close to 16,600. And before 16,600, we got a very good fall on 18th August. Okay, here you can check 16,700. Okay, this we have done already. Every day we will do graph analysis every day. Every single day we will do the graph analysis. Now here you can check, we have identified that 16,700 is the resistance on 18th. Can you see same resistance worked on 25th August? This is the beauty of doing price graph analysis. You need to find out important levels. 16,700, a big fall. Same level, you can see it is acting like a resistance. Yes, 15 minutes time frame you can use for price graph analysis. Now, one very important point, okay, you can pay attention here. Whenever price is trading at resistance level, okay, whenever index is trading very close to resistance level, do not sell put option. And in the same way, if you feel that price is trading very close to support, okay, do not sell call option. So once again, I will repeat, this is very important. If index is trading very close to its resistance, no matter how bullish you feel the graph is, do not sell put option. Volatility risk is always there. Now look at what happened in this candle. Guys, please confirm if audio is there. You can hear me now. Okay, so once again, I will repeat what I was saying. If index is trading at resistance, if index is trading very close to its resistance, no matter how bullish you are, do not sell put option. So 16,700, you can see it was the resistance here. In this candle, can you see price was trying to cross 16,700? See, candle made a high 16,712. Look at what happened in next candle. A big bearish candle you can see. So this is called as volatility risk on the day of expiry. From 16,700, in 15 minutes, you can see index is at 16,637. So if you do this with 2 times stop loss, your stop loss will easily hit. So point to remember, when index is very close to its resistance, no matter how bullish you are, do not sell put option. Wait for resistance to cross. Okay, wait for candle to get close, wait for a strong breakout, and then you sell put option. Now, same thing goes for call option. When index is trading very close to its support, okay, do not sell call option. Wait for price to break support. Otherwise, due to volatility risk, what will happen? Your stop loss will easily hit. Okay, so this is the graph analysis, guys, in front of you. Before 26th, okay, from 18th till 25th, before 26th, we have this graph analysis. 16,700 still is the resistance. Throughout the day, you can see index failed to cross 16,700 on 25th. 26th August was expiring. On downside, I can see support is 16,600. Okay, resistance is 16,600. Where index closed, you can check here. Okay, this is the last candle of the day. LTP, you can check. 16,635 was the closing. Okay, so this was the new day, 26th expiry day. Look at the first candle. Look at the low of first candle. What you will say, what price did in first candle? Look at the low of first candle, expiry day first candle low, 16,611. So almost we can say index took support at 16,600 level. It came very close to 16,611. It took support at 16,611. Now let's go to option chain data. See, this is the expiry day screenshot, 26th August, 11 a.m. Okay, 11:02 a.m. Okay, monthly expiry. Look at the OI data. Tell me support and resistance, guys, from OI data. Now, on the day of expiry, okay, not only you have to check OI data, but also you have to check change in OI. While doing OI analysis on Wednesday and Thursday, OI change is very important. Okay, compared to OI, I will say change in OI is very important. We want fresh business. We need to check where fresh put writing, where fresh call writing is going on, one day before expiry and on the day of expiry. By price graph analysis, what we have concluded, 16,700 resistance, 16,600 is the support. Okay, as per price graph analysis. Now we are doing this as per OI analysis. So first focus on OI. Can you see this number? 1 CR, more than 1 CR. Rarely you will get such kind of number. Whenever you see OI has crossed 1 CR, this is a very strong support, you can say. And look at the change in OI. This is massive. Again, very rarely you will see the number above 80 lakh. It is 81,50,800. So such kind of numbers, will give you more confidence that index is likely to settle above 16,600. This is aggressive put writing going on. Market opened at 9:15 and we are at 11 o'clock on the day of expiry. 16,600 is trading at 11 points. You can easily pocket this entire 11 points. Look at the massive OI, massive put writing happening since morning. Now, apart from 16,600, you can check 16,650, 54 lakh. Look at the new fresh writing, 39 lakh. So if you combine these two numbers, see, this became again more than 1 CR if you combine these two numbers. So this was very, very strong support, 16,600 level. On the same 16,700, again, you can check close to 1 CR. Very rarely you will see such kind of numbers. So this gives me confidence that market index is likely to settle below 16,700. And we have already seen from graph analysis, 16,700 is the resistance for index. So tell me, guys, what is your view now? Your view is bullish. By looking at OI and graph analysis, what you will say? Your view is bullish, bearish, neutral. What we can conclude from this analysis? 16,600 put, more than 1 CR, 16,700 call, very close to 1 CR. So what we conclude now? Bullish, bearish, neutral. It is neutral because on both sides we have a strong writing going on. On put side, strong put writing, 16,600. On call side, strong call writing, 16,700. So this gives us a view that index is likely to settle between 16,600, 16,700. So you can easily pocket 11 points from put side. You can easily pocket 13 points from call side. Look at what will happen if you combine these two numbers, 24 points. So you can sell 16,600 put, you can sell 16,700 call. Now what should be your stop loss? For stop loss, we will follow 200% rule. So if I'm getting 24 points, okay, my stop loss will be 48 points, 48. So what I will do, I will keep stop loss 48 points for 16,600 put. I will keep stop loss 48 points for 16,700 put. In case if my view goes incorrect, okay, market will either break 16,600 on downside or it will break 16,700 on upside if my view goes incorrect. So that leg will hit your stop loss. Yes. So strategy will be, we will sell 16,600 put, 16,700 call. Correct. Short strangle. If you wish to take margin benefit, then you can buy deep OTM option. Okay. Any reason for 200% stop loss? Amit, that's what I said earlier. This will make sure we will not lose what we are expected to earn. See, if in this view is in your favor, okay, if this trade goes in your favor, you will make 24 points. Okay, maximum what will happen? 16,600 will become 0, 16,700 will become 0. So you will earn 24 points. But if this trade is not going in my favor, so I should not lose more than 24 points. So basically we are following risk reward 1:1. Okay, Chirdeep sir, stop loss risk reward is not 1:1. See, once again, you try to understand what I'm trying to say. We are getting 11 points from 16,600 put. We are getting 13 points from 16,700 call. So total, how many points we are getting? We are getting 24 points. So what should be the stop loss? Stop loss should be 48 points, 48. Okay, double of 24. Because you got 24 points as a credit. So your stop loss is 48. You should keep 16,600 stop loss 48 points. You should keep 16,700 call strike stop loss 48. If index break 16,700 on upside, what will happen? This will hit stop loss. Okay, this can hit stop loss. This will become 48. And this will become 0. Simple. So your loss will be 24 points. If index break 16,600 on downside, so this can become 48 and this will become 0. So we will place stop loss on both legs. Okay, but we will place stop loss on both legs, but any one leg will hit your stop loss, not both legs will hit stop loss. Okay, freak trade, Ijad sir, if you want to be in this market, you have to deal with freak trades. Okay, you should go for stop loss limit order. Okay, not stop loss market order. This is what everyone is saying till now. But if you have a fear of mind and freak trades, then you cannot do trading. Okay, you cannot trade single day in stock market. So be positive. Not necessary freak trade will happen on regular basis. So follow stop loss limit order. Simple. Sudden volatility, that's what I am explaining to you. When to take trade to avoid this volatility risk. Okay, this I will explain. So as of now, I'm just trying to explain you how you can form a view on indices. Sohan sir, see, this is basic. You should know what is out the money, in the money, at the money. I will send you the basic playlist and you can watch that. In this webinar, we will not touch basics. Okay, I'm assuming you guys already know what is in the money, at the money, out the money. Stop loss 2 times of net credit. Simple. Stop loss will be 2 times of net credit. I hope, Amit, your doubt is clear why we are following 200% rule stop loss. Okay, we are taking trade with 1:1 risk reward ratio. I hope guys till now it is clear how to do graph analysis, what levels to watch, how to do OI analysis, and based on these two analysis, how you can develop a view. Any doubt you can directly please post in chat box. Okay, do not raise hand. Risk reward, yes, 1:1. We are getting 11 points from 16,600 put, 13 points from 16,700 call. Total points we are getting 24. So double of 24, 48 should be your stop loss on both legs if your view is neutral. Okay, so this was screenshot 11:02 a.m. on 26th August. Okay, this is the 26th August. I will again focus more on 26th August. Okay, so levels are very clear, guys. We have 16,700 strike resistance, 18th August resistance, 25th August. You can see index exactly turn from 16,700. So that's why 16,700 is a very strong resistance. On downside, 16,600 is put. Now I will zoom 26th August graph. Okay, I will zoom this. And based on graph analysis, we have a neutral view. Perfect. This is what we have done till now. Okay, so I'm focusing on 26th of August. See, Max Pain I do not use, so I don't have knowledge on Max Pain. So till now, I'm not using Max Pain level. This much is enough, and result are super. Okay, 80% of time you will make profit. What I'm saying here. So no need to look at Max Pain when you have graph analysis with you, when you have right levels with you, when you have OI data, no need to look at Max Pain level. Okay, so guys, we will focus on 26. This is the data. First candle you can see. See what happened initially, Nifty went up. Suddenly when Nifty went very close to 16,700, look at the candle size. Very small, tiny baby candles you can see. This clearly indicates selling pressure, because now Nifty has reached very close to 16,700 level. Look at the fall from here. Look at this rejection candle. This candle made a low of 16,683. You can check. And from here, you can see Nifty is coming down. Now, when Nifty is coming down, at what level it will take support according to you? Okay, please type in chat box. You can check here. Nifty is coming down from 16,683. Okay, it is coming down. So at what level you are expecting to take support? Perfect. We are expecting Nifty to take support very close to 16,600. Before 16,600, can you see first candle low? First candle low is important. Why it is important? Because you can see it is very close to previous day low also. What was yesterday low? PDL. You can check. PDL was 16,117. What was today's first candle low? It was 16,611. So I was expecting Nifty will take support somewhere 16,600, 16,610 level. Okay, now you can check what happened. What this candle looks like, what you will say to this candle, what price did in this candle. Correct, bullish pin bar. Can we say Nifty has found support in this candle? Yes, no? Till now, what we have done, 16,700 resistance, 16,600 support. And exactly you can see Nifty is coming down very close to 16,600. And here you can see we got rejection. Correct. So this is the support. Now you can enter in the trade. What was our original view? What view we have formed? Neutral view. Perfect. Nifty will close between 16,600, 16,700. Now you can act. So once again, you can check in which candle price took support. So to avoid volatility risk on the day of expiry. So this was the perfect candle to react, perfect candle to take trade between 12:45 to 1 p.m. Okay, this was the candle. Okay, so based on this, you can check the trade. I have taken one of my client account. See what I have done here. You can look at this graph very carefully. 16,600 put option sold. Look at the premium 14.45. 16,700 call option sold. Look at the premium 3.20. Look at the trade timing, the candle which I've told you. You need to react at right levels, okay, when it comes to expiry. So I took this trade between 12:45 to 1 p.m. when index took support. So how many points I got? Please calculate. This is how many points you can see. 14.45, 3.20, 17.65. What will be the stop loss? Double of 17.65. You can check. You need to keep 2 times stop loss on both legs. We are taking this trade at 1 p.m. Okay, expiry will be at 3:30. 3 rupees option will move to 35 in last 2 hours. Very less chance, you can say. 14.45 option can move to 35.40. This can happen only if Nifty breaks 16,600, which is not possible, which was not looking like a possible. Why it was not looking like a possible? Because of this number, you can check. More than 1 CR. If Nifty has to break 16,600, it could have done when it was coming down. But we got nice rejection from 16,600. Yes, you can also sell naked P. But the problem in naked P, you know what will happen? Your stop loss will be 28, 29 points if you are going for naked P, because the premium, if you check for put option, is 14.45. So your stop loss will be 29 points. But when you are going for strangle, you are giving enough room, more room, you can say, to your trade. Instead of 28, 29 points stop loss, see, your stop loss is 35 points. So if you frame a neutral view, you will get credit from both legs and stop loss will be higher for you. If you are only going for one leg, your stop loss will be 28, 29 points. But when you are going for strangle, your stop loss is 35 points. So you are giving more room to your trade. So instead of 28 points stop loss, you are keeping 35 points stop loss. So as per the data, you can easily go for neutral view. 16,600 heavy call writing, 16,600 heavy put writing. So guys, key is first do price graph analysis and confirm with OI analysis and then design strategy. Now, these are the live market updates, okay, which I send to every participant. So if you have done my previous courses, so you might be receiving such updates from me. If not, what you can do, you can, I have created the group for this webinar, option chain analysis. So you can be in the group, do not left the group. On every Wednesday and Thursday, okay, what I will do, I will share, you know, these kind of updates. So mostly you will get these kind of updates from me every Wednesday, every Thursday. So some of you might be aware of this. See, this I have sent update on 25th August in live market. This was Wednesday. So on Wednesday, what I found, put writing in 16,600 and 16,700. I always look for fresh business, okay, fresh writing. So here you can check 26 lakhs, 14 lakhs shares added. Call writing 16,700. So this was the resistance since 18th August. 9 lakh shares added. And apart from 16,700 calls, see, no major call writing was seen. So bias was bullish, as I mentioned. Support was 16,600. We have discussed this. And 16,700, I have mentioned it is the hurdle. So this was the update on 25th. Here you can check on the day of expiry. First update I have given 10:50 a.m. Okay, Nifty was at 16,667. These were the same levels, you can check. Now here, additional hurdle I have mentioned, 16,750. You can check 16,700, 16,750, because Nifty was trading very close to 16,700. If this was taken out, next level was 16,750. Put writing, I have mentioned aggressive. See, any number more than 50 lakhs. Okay, more than 40 to 50 lakhs, any number. So that means aggressive writing is going on in that strike. Here you can see the number is 79 lakh. Okay, this is change in OI. So once again, on the day of Wednesday and Thursday, you need to focus on change in OI. You need to look for fresh option writing. So any number above 40 lakh or 50 lakh indicates aggressive writing going on. And here you can see the number was 79 lakh at 10:50. After 11, we have seen this crossed 80. Call writing, you can check. In every strike, call writing was going on. 16, 600, 650, 700, 750. So 700 was, strong hurdle. It was not looking Nifty will break 16, 700. And look at the range which I've given at 1050. As per OI data, it seems Nifty is likely to settle between 16, 600, 750. Okay, for safety side, I've given 750 range. Any doubts, guys, till now you can ask. So how you are finding, guys, this webinar? Are you getting more insights from graph analysis, OI analysis? Wait, thank you, guys. Yes, stop loss for both legs should be same. Here you can check once again. So 16,600 put option, 35 points. 16,700 call option, you can check 35 points. When you are going for a neutral view, your stop loss should be same for both legs. Okay, so we are done with 26th August expiry. Yes, you need to watch this recording maybe 2 to 3 times. And after that, you have to practice this in live market. Okay, Tuesday, Wednesday, Thursday, you need to do practice. It may take maybe for 1 month to absorb all these things. And I will keep on sending, these kind of updates. So you can match your view with my view and see where you are lagging. So in this way, you can improve. Yes, always for every strategy, we will use 200% stop loss. Simple risk reward 1:1. Okay, 200% stop loss. In other words, risk reward 1:1. Yes, Ajay sir. So that's what I said. Even though premiums are different, okay, for call option, you have 3 rupees premium, for put option, 14 rupees premium. Okay, we have sold both legs. So total, how many points we have credited? We have been credited 17.65. So you need to keep stop loss double of that, 17.65. 2 times of net credit, I'm saying, because we are option writer and we will always get credit in our strategy. 2 times of net credit will be your stop loss on both legs. See, either price will break 16,600 or it will break 16,600. See, our view is indices is likely to settle between these two levels. If our view is wrong, so what can happen? Either it will cross 16,700 on upside, or it will cross 16,600 on downside. If it cross 16,700, then this can become 45 rupees. So you will be out from this trade and this will become zero. If price breaks 16,600 on downside, then this will become 45. You will be out of this trade. Whatever your stop loss is 35, this will become 35. You will be out of this trade and this will become zero, because we are taking this trade at 1 o'clock and 3:30 we have expiry. After 2 p.m. you will see very fast theta decay. Yes, we have to focus on both strike price as well as premium. Yeah, if any one leg hit stop loss, okay, it is expected your other leg will become zero. Simple. If one leg hit stop loss, it is expected other leg will become zero. Auto settle, you don't have to pay any brokerage. Okay, you are taking trade one side, so you don't have to pay brokerage. Nowadays, always take trade one side because there is no difference left in intraday and carry forward. So your option became zero, it became 5 paisa. Do not square up. Okay, you will save brokerage charges. Yes, from 1st September, we will always go for positional trades because margin will be same. If even if you do intraday or you do positional, okay, you need to pay same margin. You won't get any benefit. Okay, now we are done with 18th, 26th August expiry. Now next expiry we have 2nd September. Okay, last expiry which happened. So all these live analysis I'm sharing with you how I do analyze market and how I take trade, okay, in my client's account. Yes, OI platform I will share with you at the end of session. iCharts.in I prefer. So if you are very serious about option writing business, okay, if you are very serious about this, you want to take it to the next level, then subscribe iCharts.in. Okay, it will cost you hardly 1,600 rupees for 3 months. You can start with monthly option, and if you are serious, if you are willing to analyze market every expiry, then you can take the subscription of 3 months. Yes, Raghav sir. So we will not square off. Okay, 2nd September, new series. So for new series, guys, 3 steps we will do. First, we will always do graph analysis. This graph analysis you have to do on daily basis. What you need to do in graph analysis, just you need to note down important levels: support, resistance, swing low, swing high. 4 points you need to note down in graph analysis. Second step, we need to do option chain analysis. And then third step is we will design option strategy. Yes, so close Zerodha account. That's why now I say to everyone, okay, close this Zerodha account and you can shift to Angel Broking, you can shift to Alice Blue, you can go with any other broker. Okay, other than Zerodha Upstox, you can open account with any other broker. Okay, I'm not aware about these securities, HDFC securities, Kotak securities. I don't have experience. So you can open account with any discount broker other than Zerodha Upstox. Okay, any other discount broker is okay, because every broker will allow trade in far OTM strike other than Zerodha and Upstox. Okay, so trade in Angel Broking, trade in Alice Blue, you can trade in Fires. Okay, you won't get any problem. Okay, so guys, now we will start doing analysis. We will start now doing analysis for 2nd September expiry. You can see the graph. Okay, this is till now what we have analyzed. Okay, this was 18th August, a big fall. Support 16,400, resistance 16,600, breakout, resistance 16,600. So 27th, you can check here. This was 27th August. It was Friday. Till Friday also, you can see still 16,700 is the hurdle. You can see. So 16,700, 16,720. Nifty is not breaking till 27th Friday. Okay, till 27th August Friday. Okay, now what we will do, guys, we will do our analysis on 30th August, because this is the scenario we are now familiar with till 27th August Friday. Okay, new series already started on 27th. If you want, you can check what indices did on 27th. Can you tell me why we got such a big move on upside? Look at the first candle, a big fall, but couldn't break 16,600. See, so almost you can see indices took support at 16,600 and one side rally you can see we got on this day. So still levels are same. No, there is no change in option buying as of now. So let's see what happened from 30th August. Okay, first step we are doing graph analysis. So same thing with the levels which we have drawn. You can see here it took support and again market bounced. So what we had on 30th, can you tell me? How was the opening on 30th August? Correct, gap up opening. Now, after opening gap up, higher level sustain? Yes, it sustained because we got bullish candle. So if higher levels sustain on the day of gap up opening, okay, low of candle became very important. So what you can do now, you can draw one line at first candle low. Let's see what was the low of first candle. Low of first candle, you can check, it was 16,764. This means very close to 16,750. After opening gap up, okay, you need to check whether higher levels sustain or not. Look at here, we also got gap up on 23rd. But here you can see higher level did not sustain because we got bearish candle. So high of candle became very important. On the day of gap up, if candle is bearish, high of candle became very important. And if gap up sustained, then low of candle became very important. And this was the one side day on 30th August. So if you remember in the beginning, I told you, we prefer to do option chain analysis on Wednesday and Thursday. But whenever you get sudden breakouts or breakdowns, on that day also you can do option chain analysis. Okay, this will give you more insight. So now we got breakout from 16,700 level, that too with a gap. So it became very important to do graph analysis. So here you can check 16,700 resistance breakout with gap on Monday, 30th August, gap up opening day. So this was the one side rally. Here you can check now 10:52 live screenshot, 30th August, Monday. Okay, tell me support and resistance, guys. Okay, from graph analysis, we can only say 16,700 support, 16,750 support. That's it. Now we need to find out support resistance from OI data. So where is the fresh business, fresh writing going on? In which strike price you can see fresh writing? Okay, first you need to focus on OI, then also you can focus on fresh writing. Correct, 16,700 highest OI, you can check 60 lakh. And look at 16,800. Any number above 40 lakh, 50 lakh is aggressive. So these numbers we used to get to see on expiry day or one day before expiry. But you can see what you are looking at. We are looking at these numbers on Monday itself, on the day of breakout. So fresh writing was happening in 16,800 on Monday itself. 16,700 you can check highest OI. 16,700 was resistance till now, but today we got gap up opening. So 16,700 you can see it turned support. 30 lakh new shares added on Monday itself. And one more important point you should note down. Look at OI change in on call side. We do not have any strike price in which fresh call writing is going on more than 10 lakh. You cannot see any one single strike. So this indicates no call writing is going on because every strike is having change in OI less than 10 lakh. This means index has some room left to go on higher levels. On put side, you can see 30 lakh, 47 lakh. But on call side, we do not have any single strike more than 10 lakh. So this clearly indicates index has some room left to move on higher side. Perfect. So this clearly indicates index is highly bullish, I will say, because we got gap up opening, breakout, and look at the numbers, 47 lakh, 30 lakh. Okay, these are not regular numbers, and that too on Monday. So market was highly bullish at that time. And first time I took, trade on Monday in client account, I sold 16,600 put option. Now, Amit, we have Amit sir with us, Amit Pandekar. In his account only, I took trade 16,600 put option on Monday itself. I sold somewhere close to 15 because by looking at breakouts and this OI data, I was convinced index is not likely to go below 16,600. So I sold somewhere close to 15 rupees and I put stop loss 30 and it became zero. Okay, now again, same day, 127. Okay, once again, you should look here. This was 10:52 Monday, same day. Okay, pay attention to these numbers. And now you can check same data at 1:27 p.m. Now, what changes you find? Okay, from 10:52 to 127, what changes you can see? So once again, if you wish, you can look at the numbers on put side. 16,700, 16,800, okay, 60 lakh, 47 lakh. Now you can check what happened at 127. What is the change, guys? You can see. Okay, once again, you can check 16,700, okay, 16,800, okay, 16,900. If you wish, you can check. All these numbers further increase. Okay, this 60 lakh became how much? You can check 61 lakh 55,000. From 47 lakh, you can check new shares added. This number became 51 lakh. Okay, this was 16 and 14. You can see what happened. 21 and 23. Okay, so all these points indicates market is highly bullish. Correct. More OI added in 16,800, 16,900. In every strike, you can see more OI was added. Correct. So on Monday itself, we got a view. So some days can be like this. So it's not necessary you have to take trade on Wednesday only. Depend on how market is behaving. So on the day of breakout, if you wish, you can take a trade. If OI data is very strong, okay, you can take a trade on the day of breakout itself. Okay, so this one trade I have explained, I took trade on Monday itself in 16,600 strike price. Now let's do graph analysis for 2nd September. Okay, now we will focus on 2nd September, that is Thursday, because from Monday, if you remember, market was one side. I will show you the graph here, you can check. So this was Monday, one side. Again, Tuesday, it was one side day, non-stop. So Monday, Tuesday, Nifty index went up more than 200 points. Can you see this is without retracement? So this was very steep rally. No major retracement you can see. 16,700 in 2 days. Nifty is at 17,130. So this was more than 200 points rally on both days without any major retracement. Okay, so this was Monday, this was Tuesday, and now came Wednesday. See what happened on Wednesday. What you will call on Wednesday? What was this? This was retracement, pullback rally on downside. Okay, almost you can say Nifty was one side because 2 days back to back without any retracement, Nifty went up 400 points. So this was the pullback rally on Wednesday. So Monday, Tuesday, Wednesday. Now let's do the graph analysis till Wednesday. So tell me guys, support and resistance now. ओके पंकज सर देखिए फिर से एक्सप्लेन कर रहा हूं आपको. यूजुअली वी डू OI analysis on Wednesday, Thursday. Okay, every Wednesday, every Thursday. But when you see breakout, So on the day of breakout, it is very important to do OI analysis because you will get very early trades. So usually without breakouts, breakdown, every Wednesday, every Thursday, you do OI analysis. If you have a breakout like one we have seen in 30th August, you can do OI analysis on that day also. OI data is continuous process. It is a dynamic data. So every half an hour, you should study OI data. Okay, every half an hour. And focus on change in OI. Okay, where fresh put writing, fresh call writing is going on. Okay, now we will try to find out support and resistance. So as of now, what we got, 17,200, perfect. We got one resistance here, very close to 17,200. This is 17,225. Look at the swing low. This was the swing low. So we will note down this level. Okay, after indices came down, bounced. Okay, so this was the resistance, 17,150. Okay, 17,150. And on downside, okay, this was the swing low. So this is 17,075. And just before that, and just below that, you can see 17,055. So yes, on downside, 17,050, we can say 17,150, 17,200. Okay, these are the levels we need to watch. And your view should be bullish because this is a very big jump in index. Okay, 400 points jump in 2 days. So overall, you can see the structure is still bullish, and this was, small retracement because this was the steep rally without any major retracement. I hope guys levels are clear. 17,200 or 17,225 resistance. On downside, 17,050 is support, and then 17,150 is the support. Okay, so this is the levels we are having 1 day before expiry till Wednesday. Now let's come to expiry day. Look at the first candle. Okay, it is very important how to read first candle of the day. Yes, Ajay sir, perfect. Market can also move sideways. So we do not know, how day will be. So before that, you should be ready with your levels. Overall structure, I will say it is bullish. Wednesday, it was, I will say, retracement day on downside. Overall structure is still bullish. 3 levels are very important for us: 17,200, 17,150, 17,050. Look at the opening, guys, where we got opening. Can you see we got opening between 17,150, 17,050. Opening we got between 17,050, 17,150. This was the opening. And first candle, you can see bullish candle, rejection. You can see candle is having nice lower wick. So this reconfirm. Index is still taking support at 17,050 level. Look at the low of first candle. Low of first candle, 17,059. We already know 17,150 is the resistance. So this is no trading zone. Okay, do not trade. On downside, you have a support 17,050. On upside, you have a resistance 17,150. We got opening between these two levels. Okay, now let's do some OI graph analysis. See, this is the live screenshot, 12:10 p.m. Okay, see, so these are the at random timing, I have taken these screenshot. Okay, whenever I see some important activity on the graph side in OI data, so I have taken this screenshot. So entire day you need to watch where fresh call writing, put writing is going on 1 day before expiry on the day of expiry. 2nd September expiry day, OI data 12:10 p.m. Tell me guys what is going on. what you feel? Index will not break. What is the strong support? What is the strong resistance? Do we have any strong support? Any strong support, guys? Perfect. Strong support 17,100. Perfect. 17,100. Look at the addition. Again, any number, just remember these words I'm saying, these words which I'm saying. Any number above 40 lakh, 50 lakh on OI chain side is massive OI. Aggressive writing has started. So 17,100. Okay, at 12:10 p.m. Aggressive writing has already started, but you can see there is no premium to pocket. It is less than 10 points. So by just looking at this data, I can say, yes, Nifty is likely to settle above 17,100 because this is huge addition in OI. And this again number very close to 1 CR. So any number, close to 1 CR, above 1 CR, they are very rare. You will not get on every expiry in Nifty. Look at 17,150. Again, aggressive 40 lakh, 24,950. Okay, this much addition happened today only. Look at the total OI, 45 lakh. Out of 45 lakh, 40 lakhs added today only. So this is the fresh put writing going on in 17,150, 17,100 since morning till 12:10 p.m. Now look at on call side. On call side, if you see, I agree that 17,200 is having highest OI. But do you see any fresh OI writing, very strong OI writing? Can you see on call side? Any fresh call writing? Can you see on strong side? No. Both levels are still below 20 lakhs. You can see. Look at here what is going on. If you combine these two, okay, the number is more than 1 CR now again. So instead of forming a neutral view, you have to form a bullish view, not neutral view. Because I cannot see any massive call writing happening in today's session. Every strike is below 20 lakh. And here you can see two strikes have more than 1 CR. So what this indicates now, Nifty is likely to settle above 17,150, 17,100 level. Okay, so these points are very important to pay attention in live market. And we have already seen on the graph 17,150 is the resistance, right? What we have analyzed till now, 17,150 is the resistance. Once 17,150 is taken out, okay, you can short 17,150 put option. Because look at the premium, 20 points is available to pocket. Even if it cross 17,150, you are getting 13, 14 points. You can easily pocket on the day of expiry. Yes, you can use Sensible. See, I don't have experience. I have not used Sensible. If you wish, you can use Sensible also. I have a habit of using iCharts, so I prefer iCharts because this is a crystal clear picture I can see. So we have many tools like iCharts, Sensible, MyFNO. So you can use anyone which you want. I hope, guys, this is very clear. Why we are not going for neutral view? Because we do not have massive call writing. We have only aggressive put writing. So instead of going for neutral view, you should go for bullish view. And remember, once it cross 17,150, then only you should go for bull put spread. You can sell 17,150 put option. Okay, just give me a minute. I will be back. Yes, so guys, I told you I will be back in a minute. Okay, so this is 7:10. So first time I have took webinar, which is more than 2 hours. Yes, coming Wednesday, not Monday, Ajay sir. The reason why I did analysis on Monday this time because we got breakout. 30th August, Monday, we got gap up opening breakout. 16,700 was resistance breakout. That's why we did OI analysis on Monday. Usually what you can do analysis on Tuesday, but take action on Wednesday. Okay, design strategy on Wednesday, one day before expiry. I hope guys, this point is very clear. Yes, if you are convinced as per OI data, strong call writing, put writing is going on, then you can take trade on Tuesday. Okay, so now let's come back to the graph. So what is our view, guys, for 2nd September expiry? Bullish view. Okay, by just looking at 17,100, 17,150, I was not expecting Nifty to settle below 17,150 or 17,100. This is huge OI. If you combine these two, number became more than 1 CR. Okay, but the point is, when you are taking trade on the day of expiry, we need to avoid volatility risk. Okay, we have to make sure our stop loss should not hit. So for that, we will again come back to the graph. Okay, look at what happened. 17,150 level is taken out. See, so till the point, 17,150 is not taken out. Okay, do not take any action because we got opening between 17,150, 17,050. This was no trading zone. But what we need to do, guys, we need to take action in 17,150 strike. So wait for some retracement and see if price is taking retracement at 17,150. See what happened. After breakout, can you see it came down? Price came down. Look at the low of this candle. Exactly 7150.45. So this confirmed this 17,150, which was resistance, it acted like a support. And why 17,150 only acted like a support? Because of highest OI addition, which we have seen in OI data. You can also convert this into 5 minutes time frame. See. Okay, this is now 5 minutes time frame. Can you see on 5 minutes time frame what happened in this candle? Nice rejection exactly at 17,150 level, you can see. And this was the right time to enter in trade, which we have decided. So what we have decided earlier, once 17,150 is taken out, then only we will go for a trade. Okay, we will sell 17,150 put option. We will go for bull put spread. And this exactly happened. It crossed 17,150. But to avoid volatility risk, we will wait for some retracement. We did got retracement. You can see this was the candle. Exactly it tested 17,150. And then it went up. So again, here you can check my trade. I took 17,150 put option. See, I sold 17,150 put option. I pocket 14 points. Look at the time, at what time we pocket. We pocket at 12:52. Okay, in this candle. After retracement, look at this candle. This is 12:45 candle. So this candle will close at 12:50. In next 2 minutes, I took decision. We will go for 17,150 put option. This is the right time. 14 points. And to get margin benefit, I paid 90 points. So still you can see I made 13 points from this trade. 13 points is like 650 rupees, which was not bad in one lot. Okay, here you can see this is the update I've given to everyone. Okay, 2nd September, Thursday, weekly expiry. You can read out this. So please type in chat box if you are getting, these types of updates in live market. If not, you have to be in group which I have created. You will start receiving these kind of updates in live market from this Wednesday. Yes, first we will execute long put option and then we will sell 17,150 put option. So if you are getting, these kind of updates, now you will able to relate what was, I was trying to explain you. Wait. So at 11 o'clock only, you can see we got 17,100 strike, 54 lakh shares added. So this was the aggressive writing going on. Okay, so as per OI data, it seems Nifty is likely to settle above 17,100. A strong breakout above 17,150 will increase the probability of Nifty to settle above 17,100 in today's session. When I write this update, at that time 17,100 was trading somewhere close to 10 to 11 points. Look at the next update, 12:55 p.m. Nifty was trading at 17,188. After breakout from 17,150, see Nifty retest same level, 17,150, 12:45. So put writing in 17,150, look at 50 lakh, aggressive. Any number above 40 lakh, remember, it is aggressive. This will give you more confidence to enter in the trade. So it seems Nifty is likely to settle above 17,150, which exactly happened. And Nifty crossed 17,200 because there were no major OI, as I explained. So 17,200 level did not sustain. See, this level did not sustain as a hurdle. This was the old business, but on the day of expiry, you can see these numbers are very small on the day of expiry, 16 lakh, 17 lakh. If you combine both, this is only 33 lakh. But here you can see if you combine these two, this is more than 1 CR. So your bias should be on bullish side. Okay, so look at the stop loss again, same 200% rule, guys. You have to place stop loss. 14.20 selling price. Look at the stop loss, double of this. Okay, 28.40 should be your stop loss. I always follow stop loss limit order. Since beginning, I follow stop loss limit order only. And finally, this became zero. So this is how you can act at the right time on the day of expiry to avoid volatility risk. So this trade I have taken after retracement. Okay, on graph, we have seen 17,150 was resistance. After resistance, here you can see it became support. Okay, this was the breakout. It came down, retest same level, and again it bounced. Okay, now let's do graph analysis for Monday. So as I told you, this is ongoing activity. Graph analysis you need to do on daily basis. It is very simple. You just need to note down important levels on graph. Okay, swing high, swing low, support, resistance, these levels you need to note down. That's it. So we have Friday trading session. Let's see what happened on Friday. So tell me, guys, we don't have to change, much when it comes to support. So 17,225 is the support. Now tell me the resistance. What is the resistance for Nifty? Okay, 17,300. Let's draw a line. So this is the support. This is the resistance. Okay, 17,314. Look at the last swing high which we got in last candle, 17,340. So these are the hurdles now. Okay, 17,310, 17,340. This is the supply zone for Nifty. So these are the levels. You need to update this graph on daily basis. Upside 17,310, 17,340. Downside, look at the low of this candle, 17,228. So you can take it 17,230 on downside. Okay, 17,230. Look at the low of this candle, 17,212. So 17,210, you can take it. So these are the levels for Nifty. Okay, OI data, we will check either on Tuesday or on Wednesday, depend on market opportunity. Any doubts, any queries you can ask. I'm done with this session. So if you have a bullish view, you can go for bull put spread. Bearish view, you can go for bear call. Neutral view, you can go for short iron condor to get margin benefit. So when it comes to OI data, fresh OI writing is very important. Any number more than 40 lakh is aggressive OI happening. Okay, so you can refer, all these screenshots. I will share this PPT with you. Iron condor example, Manish, we have already discussed. Okay, you can check here. Iron condor we have discussed in previous week expiry. See, look at here, 16,600. Check here what is going on. 81 lakh. 16,700. Check here what is going on. 30 lakh. 16,600. 81 lakh 50,800. Look at the OI here, more than 1 CR. Look at 16,650. It is 39 lakh. On this side, 16,700. Again, you can see very close to 1 CR. This is very strong hurdle, 16,700. Look at the addition, 30 lakh. Now we have addition in every strike. See, all strikes are above 20 lakh. All strikes, you can see they are above 20 lakh. So we have call writing in every strike. So, this clearly indicates Nifty may face some hurdle while moving upside, because every strike is having writing, call writing. And strong one is in 16,700. So here you can sell 16,600 put, 16,700 call. To get margin benefit, okay, you can purchase deep OTM options. But I took trade in strangle, not iron condor. To save brokerage charges, I have done this trade with 2 legs. So sold 16,600 and 16,700. Yes, we don't have to make any view now because Friday is the first day of expiry. Margin cost I have explained here in the beginning of this session. I've given you the idea about margin. Here you can check. So when you go for iron condor, this will be the margin requirement less than 50,000. When you go for short strangle, see, margin requirement will be more than 1 lakh. And when you go for bull put spread or bear call spread with margin benefit, okay, your margin will be less than 40,000. And if you sell naked call, naked put OTM, this will be the margin requirement. Okay, this I have already included for you. For ATM strike, obviously margin will be higher. For OTM strike, margin will be lower. When you take margin benefit, okay, it will be less than 40,000. So with these analysis, guys, I will say 80% of time you will make profit. Okay, if you follow all these analysis, returns are less, 1.5% you can make, 1.5 to 2% return on capital. Every week you can make, but that will be on consistent basis. 75 to 80% of time you will make. So let me tell you when my stop loss is hit. So as far as I remember, in the month of July, okay, 8th August, on this day my stop loss hit because market was falling one side. Okay, non-stop without any retracement, market was going down. So here my stop loss hit and we made a loss of 13, 14 points. After 8th July, again my stop loss hit on 18th August. Okay, market gives the gap up opening on 18th. It tested 16,700 for the first time, and then again it started falling non-stop. So on these 2 days, my stop loss hit. Otherwise, every single week we have made profit for our clients. So till date, based on this analysis, which I have told you, so I have delivered 15% return, 15.5% return to all clients by doing option writing, by making 1.5% every week. So profits are small, but they are, consistent. Raghav sir, if you have initiated trade and trade is going in your favor, then you don't have to cancel. Okay, you can hold it end of day. If you are taking overnight position, guys, remember, if you are going for overnight position, always place AMO order. Okay, after market order is very important. So always place after market order to avoid any overnight risk. Yes, Wednesday, Thursday straddle, you can do it, Ajay sir, not a problem. This was the additional I have told you. You can also go for bull call spread, bear call spread, bull put spread, bear call spread, and short iron condor. Okay, so if you have capital, you can go for 2 to 3 strategies, you can go. Okay, so guys, I will share this PPT. I will share this recording in the group. Okay, in some time, I will update this in group. Now, those guys, if you wish, you can left the group. Okay, those who are already getting my updates in live market on the day of expiry and on Wednesday. Okay, if you wish, you guys can leave the group once I post PPT and recording. And those who are new, you can be in group if you wish. I will post these updates every Wednesday, every Thursday. Okay, these updates you will get in live market. So you will get the idea where fresh call writing, put writing is going on. Okay, thank you. Thank you very much, guys, for taking out time, joining this session. You do the practice. I will say this will add, another skill in your trading, and you can make consistent income. Okay, thank you, guys. Thank you.